Welcome back to China's stock market. I'm your host, Jack Kuzi, and in this episode, we do the weekly recap, where we recap the biggest news stories coming out of the mainland and Hong Kong in regards to China's financial markets, stock markets, capital markets, whatever you want to call them, the big news events, any regulation or any policy moves we've seen by the regulators or the CCP. And as always, it's been a big week in terms of news. A lot happening within China's financial markets as they aim to stem the bleeding somewhat. In the last couple of weeks, we've certainly seen that bleeding stemmed. We've seen a big rally, particularly in mainland markets. We're going to cover all that this week. We're also going to cover some earnings calls. It's in the midst of quarter four, end of financial year, 2023 reporting for Chinese markets. We'll cover those. But if you're listening to us on YouTube, please give us a thumbs up and a subscribe. If you're listening to us on podcasts, this is our second episode that we release. Hopefully we're on Google Podcasts by now. Give us a 5-star rating if that's what you do on podcasts. But without further ado, let's get into it. And before we do that, let's begin with a disclaimer. Just remember, these aren't recommendations. They don't constitute a recommendation to purchase or sell securities. It's not intended to be financial advice. I try to keep the information as factual and up-to-date as possible, but sometimes I can't. And just remember, guys, this is my own personal opinion. I take a keen interest in China's financial markets, have been for at least a decade now. I manage some money here in Sydney, Australia, where I'm filming this or recording this. And I still maintain that the mainland is the most important economy in the world. It's the second largest. So we should cover its financial markets in a bit more in depth. So without further ado, let's get into this week's kind of agenda. We're going to run with quick hits, some quick news stories coming out of the mainland. We're going to look at the market performance, the three major indexes, which has been quite good. We're also going to take a look at Li Auto, which was a stellar report from one of China's largest EV makers. We're going to take a look at Shein and its IPO, or its lack of IPO, geopolitics, and Pinduoduo back at the forefront of news. National team back at it again. I actually saw some interesting stats around how much the national team has been buying in terms of equities and how it pales into comparison to what they bought in the 2015 crash. So we might see some more buying from the national team. We certainly have seen that over the last month or two. We covered that in last week's episode. We had a look at how they've been buying over the last 6 months, really, and really escalated that since the year began in 2024. We're going to take a look at Baidu Earnings, one of the major tech companies within China, one of the famous bats, Baidu, Alibaba, Tencent, which used to rival, what's the word I'm looking for? Can't believe I've forgotten it. I'll remember in a moment. Which is the opposite in the US, or its rival in the US. The Fangs. How could I have forgotten that? At number 8, we're going to look at Vipshop or VIP Shop, depending on which way you pronounce it. I've always pronounced it VIP Shop. I was actually listening to a conference call yesterday. Not a conference call, actually a webinar on Chinese equities run by Crane Shares, and he called it Vipshop. So I'll defer to him. And Netease, the second largest gamer within China, one of the largest gaming companies in the world, also reported. Market was disappointed somewhat on the back of Netease and Baidu, but stellar reports, I thought, from VIP or VIP and Li Auto. All right, let's get into quick hits. These are just some of the shorter news stories that we saw coming out of China and Hong Kong during the week. Now, remember, we cover Friday to Thursday. So I filmed this on a Friday morning Sydney time. So we run through last Friday's market, Monday, Tuesday, Wednesday, Thursday. So last 5 days, 7 days calendar. And then we repeat every week. And hopefully we'll do some more interviews as we start to build, I guess, the audience, which needs a bit of work. But hey, all things have to start somewhere. All right, some quick hits. So Baidu was in the news. Funny enough, a short-selling firm during the week recommended Baidu as a inexpensive AI play, and that was before its earnings call came out. We'll talk a little bit about their ChatGPT version of Ernie during their earnings call, which has required a lot of money to be spent on and has a lot of rivals within China. But that was an interesting piece of news. On Tuesday, the 27th of February, the mainland had one of its strongest days, if not its strongest ever, so the advances versus decliners was 4,722 stocks advancing and only 279 stocks declining, which I thought was amazing. However, yesterday's move was even bigger, where we saw only 90 stocks decline. So Thursday, the 29th of March, a leap year, we won't see that for a while. Only 90 stocks declined on the mainland, on the Shanghai, on the mainland composite. We saw BYD during the week debut its most expensive car, 1.68 million yuan, or $233,450. It's a high-performance electric supercar. It's there to rival the Ferrari NV and Lamborghini. It's initially going to be for the Chinese market, and apparently it can hit, I'm not a car enthusiast, but those of you who are, let me know if this is good, 100 kilometers or 62 miles per hour in 2.36 seconds and reach a top speed of 309.19 kilometers. That's pretty fast. So that was a big move, or a nice little move there by the world's leading car maker or electric car maker in the world. We saw Netease. We're going to cover their earnings. They rose sharply in Hong Kong after the mobile version of its blockbuster PC title game was approved. We actually saw a lot of approvals in terms of gaming this week, showing signs that, regulators are back. They want to get things moving on the mainland, particularly with its gaming sector, which has been hit a lot by regulation, and only got hit by a big piece of regulation in late 2023, limiting the amount of times you can spend on gaming and incentives that gaming providers provide. NIO was in the news, where its battery swap stations have been part of a virtual power plant program in Denmark. Just shows how far advanced China's EV market is, and we'll see that via Li Auto's earnings. A bit of property news. A Hong Kong-based creditor, Evercredit, has filed a winding up petition against Country Garden, a major Chinese property developer, for non-payment of a Hong Kong $1.6 billion loan. I thought that was interesting, plus interest. And there was rumors yesterday, which was big news, that China has its own lithography machines, or has built its own lithography machines. If you listened to last week's show, we talked about China's semiconductor market. I thought that was a really good area of investment. Because China wants to build that closed loop market. They actually had a stellar week. Most semiconductor companies within China and those listed on Hong Kong, which we covered last week, which were, you could buy as an overseas investor, were up double digits. I know SMIC and I'll remember in a moment, but Z was up, over 10% for the week. So big moves, and on the back of that. Now, that is just a rumor, but if it is a massive move for China's semiconductor industry, and I would be quite bullish, but remember, it's not a recommendation. Let's take a look at the performance for the major indices. We're going to cover a little bit more as we get. I really want to get the star market on there and a few more indices, but let's have a look at the SSE Composite Index. I'm currently developing a Chinese stock market course, just to give people an understanding of the different indexes, what you can buy, what you can't, how to look at the Chinese market in a bit more detail. However, the SSE up 2.37% for the week. The Shenzhen Composite Index 4% for the week. The Hang Seng fairly flat, up 0.13%. Big move yesterday. Big moves on mainland indexes. The Shenzhen was up 3.13, so fairly flat leading into last week, and yesterday, and 1.94%. If we look at the monthly performance, so going back from the 29th of March and going back a month, 5.19% for the SSC, 9.46% for the Shenzhen, and the Hang Seng up 3.8%. So another good week, fueled by, renewed optimism about policy support from the Chinese government. We saw a whole bunch of more policy support. We saw a possible ban on leverage from 300% to 200% for some of these hedge funds and quant trading firms. A lot of policy support, a lot of news, and a lot of earnings reports, which were mixed, but there were some bright spots, I thought, out of those, and we'll cover them as we go along. Let's get straight into earnings and let's have a look at Li Auto. I mean, this thing popped in excess of 20%. I think it was up 15% on the back of this earnings. Actually, it was up 25% on the back of this earnings call. It was a massive move. First kind of EV startup. My understanding was to run a profit. Its deliveries in December alone rose to 50,353 units. The first time the company has exceeded the 50,000 mark in a month. So Li Auto wins the race to become the first of China's major EV startups to turn a profit. You talk about, deliveries. Li Auto delivered a record 131,805 vehicles in the fourth quarter, marking an increase of 184.56% year on year and 25.4% from the third quarter. So massive move. If you're watching this on YouTube, you can see I've got a table there, but if you're not, if you're listening, I'll run you through the numbers. Revenue was at 41.73 billion Chinese yuan for quarter four 2023, took it to a full year report of 123.85 billion. Beat forecast so it's forecasting for 31.25 billion for 2024. Net profit 5.66 billion for quarter four, and then a full year profit of 11.7 billion. Vehicle deliveries, they forecasted 100 to 103. So they did forecast down in terms of vehicle deliveries going forward. However, if you look at its gross margin, was fantastic, 23.5%. I don't think any car company in the world, other than Chinese ones, but other than Tesla, would have a gross margin like that. Average for the year for 2023 was 21.5, so 23.4 for the quarter four. We talked about year on year growth doubled, more than doubled from 2022. It was a absolutely incredible report from this company. They also talked about launching new models. So the Li L6 ERV is set to launch in 2024. And that was the company's first model priced under RMB 300,000. So about 41,690 US dollars. They wanted to reach monthly sales or have ambitions to reach monthly sales of 30,000 units for this. It was a great report and the market rewarded it, and it continued to rally as we got along. And Chinese EV makers in general got a big boost from this. We talk about domestic consumption for Chinese EV makers, which is still quite strong. You're talking about in China where you've got an adoption rate of nearly, I think, 15 or 16% in terms of EVs. That's when you get that acceleration, kind of that L curve of adoption that we see. And remember, we highlighted NIO's plan. We highlighted BYD is building a plant in Hungary to service that European market. Chinese companies, their EV growth is going to go into the rest of the world. As we start to see, I guess, conventional manufacturers pull back on their EV markets. I think I heard a report where Mercedes had said it's going to start building more combustible engines, wasn't going to go EV only, whereas it's full steam ahead with some of these flagship companies within China. That was a great report. All right, let's talk about Shein IPO or the lack of IPO. Shein walks around and says it's not a Chinese company, but it is. It was originally from China. It is based in Singapore. However, most of its vendors are from China. This is the fashion app. Quick, cheap, straight to your door. They have been considering an IPO for quite a long time. There is some anticipated US resistance, which I will cover in a moment. So they're looking to go to possibly London. It wouldn't surprise me if they end up listing in Hong Kong or Singapore due to regulatory challenges. But this has been a long-going saga for these guys. But it is a great company that's doing some great things. However, along with its rival Temu, owned by Pinduoduo, it is facing some more regulation from the US. So during the week, we saw 2 US senators urge President Biden to take executive action and address the influx of duty-free packages from China, citing competitive disadvantages for US manufacturers against low-cost competitors using forced labor and state subsidies. Now, they're talking about Temu, Shein, and AliExpress. And the reason why they're talking about them is they benefit from the current duty-free policy, right? So if you import something from overseas, you buy it online through Temu, which stands for Team Up, or Shein or AliExpress, and it is under $800, it's tariff free. It doesn't face a tax when it comes through. So therefore, you're more inclined, or overseas competitors are more competitive because they're not facing the tariff tax on top of the cost of their services. This was a law that went from 200 to 800 in 2016 to expedite commerce and reduce consumer costs for US citizens. You then have, the world shut down, the, increase in online purchases, and then now you have Temu, Shein, and AliExpress really, really biting down into market share of your Amazons, of your eBays, and the several other US competitors within the US. Certainly not, doing Amazon numbers, but they have been growing. I mean, Temu is, I think, the fastest growing app within the US in the app stores. So a move here to really go after Chinese businesses that are taking market share from them. So this could be a real hurdle, particularly for Temu, Shein, and AliExpress, and could scuttle Shein's IPO, particularly its valuation if it got through, because a lot of their businesses is done in the US. So that was a bit of a move there in terms of lawmakers from the US. We also saw specifically US lawmaker Representative Blaine Lutmuka, I think who's a Republican, pushing for a ban on import goods sold on Temu, which we know, the Chinese shopping app, over concerns of insufficient action against forced labor. So that would really, really affect Temu's IPO and affect its valuation. Forget that last section there, Temu, but in terms of the $200 to $800, kind of, if you can't beat them, why not ban them? But certainly this is part of the relationships that has happened between the US and China, and the tit for tat that is happening on trade that is affecting specific companies. If you look at Pinduoduo, it's one of the best performing Chinese stocks, overtook Alibaba, its most valuable company. It's been on a tear, and a lot of that has to do with Temu. They famously took out massive ads within the Super Bowl. Like I said, one of the fastest growing, if not fastest growing app on app stores within China. But that was a little bit of news that it could affect those valuations, particularly those share prices for those companies. Pinduoduo in particular, as it's listed, and AliExpress with Alibaba. We talked about Alibaba's earnings, massive gains in terms of overseas expansion. AliExpress a big one there, and then it could affect Shein's IPO. Let's have a look at the national team. We covered them last week. We talked about who the national team was. This was a report by UBS via Bloomberg, where national team assets have continued to increase. They talked about 410 billion or 57 billion in onshore sales in 2023 to support the market. We kind of covered that last week. UBS estimates based on excess transaction in 54 Chinese ETFs, with a significant portion directed towards the CSI 300 and the CSI 500. Central Huijin announced plans to increase its ETF holdings, indicating active state intervention. Comparatively, and this is what I was referring to earlier, in early July-September 2015 period, the national team added 1.24 trillion yuan of shares during a market downturn. So at the moment, they're at 410 billion yuan. During the 2015 period, they went to 1.24 trillion yuan, almost 3 times. Actually, it is 3 times, which indicates there could be a lot more to come and a lot more policy support or market support for the market. So if you are invested in Chinese equities or thinking about getting invested in Chinese equities, and you can buy mainland stocks through ETFs, there's plenty of them, this would be an added bonus to think maybe there's more policy support coming through. Maybe not. Maybe China doesn't want its stock market to, have like a V-shaped recovery. And part of me thinks they don't want that. However, you would know that there is probably more support coming if they need it. All right, let's take a look at earnings and let's take a look at Baidu, one of the largest tech companies within China. If we talk about the Chinese tech run of 2019, 2020, 21, 2022, when we saw just Chinese tech companies just go crazy. Not only Alibaba and Tencent, but the likes of Meituan, the likes of Lufaxes, the likes of Pinduoduo, the likes of JD.com, which we don't hear about much anymore. Baidu kind of underperformed them. And I used to always say during that period, forget the bats, it's all about the mats. And the mats was Meituan, Alibaba, and Tencent. So it's kind of been a forgotten child of Baidu, has kind of been a forgotten tech company of China. And rightfully so in some cases. Search is, it's if you look at Baidu, you want to compare it to a US counterpart. And I hate it when we do these comparisons because they're never the same. Baidu was always compared to Google. It was China's search engine. And to some extent, it is China's major search engine. So it relies a lot on, ad revenue. But it does a lot more. It's got a burgeoning AI division. It was flirting around with EVs and cars. It was doing some other apps there. It runs iQIYI, which is their version of Netflix. So it has a few more things that it runs through. Search always tough during that big breakout of Chinese tech companies because we often talk about, why China is so good at the mobile or the phone, mobile gaming, apps, etc. It's because it kind of skipped the desktop computer. So when China or Chinese citizens came into the internet, they went straight from no internet to phone through the internet or the smartphone. Whereas when you look at Western worlds, particularly the America, and I know as a kid, I went from no internet to internet on a computer or a desktop, then to internet kind of on a laptop, then to internet on the phone. And then they had the likes of, WeChat and all these internal apps, and they you still had search, but you kind of searched through those internal apps. However, Baidu reported for quarter four and then, had its annual report. It was mixed. It was a bit of disappointing. It talked about its monthly active users on its search engine reaching 667 million in December, up 3% from the same period. Stock was down 7.4% on its US ADR listing. Quarter four revenue 35 billion yuan or 4.9 billion US, a 6% increase year on year, meeting analyst expectations. None of that double-digit growth. Annual revenue grew by 9% to 134.6 billion yuan. Now let's run through, I guess, some of the key components of here. They talked a lot about its ErningBot. So ErningBot is rival to ChatGPT, or China's version of ChatGPT. There are others being produced. So it takes a lot of money to produce ErningBot. They have begun to monetize that. And they did achieve significant monetizing breakthroughs through 2023. So charging people for it. If you look at ChatGPT, there's 3.5 for free. ChatGPT 4, you pay. I actually pay for that version. I do a lot of this on ChatGPT. Makes it a lot easier for me. Net income, 2.6 billion yuan, a 48% decrease from the previous year. And that's, I guess, where the market went blur. But that was because of substantial investments into AI, particularly its ErningBot. So its generative AI services, so paying particularly for ErningBot, generated 656 million yuan, nothing, 7.8% of total cloud services revenue of the 8.6 billion yuan. So it's under their cloud revenue. One of the bright spots was their cloud growth. So they had really good cloud growth during that time. I think it was 8%. Let me see if I've got this figure in front of me. I don't quote me on it, but I think it was 8 to 10% growth on cloud revenue, which I thought was quite okay. As of December, around 26,000 enterprises were using ErnieBot, an increase of 150% increase from the previous quarter. Here's the thing with Baidu. And generally, if you want to talk about China's AI, there's going to be one winner, a winner takes all on ChatGPT or their ChatGPT. Whether that's going to be Baidu, Baba, or Tencent, I think it's going to be one of them. I think you can really narrow it down to one of them. Baidu, often says, here's Ernie, and now let's create apps and dApps and programs running through Ernie. Of course they want that because it's their company, their product or their service, rather than let's have a wave of these startups producing their own versions of ChatGPT or Ernie or rivals. So they've actually pumped a lot of funding money into companies like that to try to get them producing through Ernie. Where they lack is maybe the data that Alibaba has through Taobao, Tmall, and all the rest, and what Tencent has through WeChat. But one of these guys is going to win, and I think it's going to be a winner all. I've always thought these guys were undervalued, particularly because of their AI division and particularly because of the data they have. Again, very dependent on ad revenue through their search engine. Tough in a climate where you've seen significant GDP decline, significant consumer spending decline. Let's just cover their video streaming platform, iQIYI, up 2%, not great. And then monthly average revenue for the quarter increased from 16 yuan from 15.5 yuan. Again, not a great figure, but at least it went up. Market didn't like it. It got sold down because of that. All right, let's take a look at another earnings report, and let's look at Vipshop or Vip.com. And they reported, and it was a stellar earnings. If you don't know who Vipshop is, they're a Chinese e-commerce player, rival kind of to Taobao, Tmall, JD.com, Pinduoduo within China. More on the lower end of sales, like kind of the cheaper stuff. But their stock finished 12.6% on the back of this report in their US listing or their ADRs up around 15% at one stage. And that was on the back of really good growth, out of this company. You can take this one or two ways. Chinese consumers strong or Chinese consumers not strong because they're buying cheap stuff off Vip. Either way, it was a good report for a good Chinese company. So earnings beat for fourth quarter. That was really good. Their adjusted EPS was 5.79, surpassing analyst estimates of 5.03 RMB. Revenue for the quarter exceeded expectations, coming in at 34.7 billion against a consensus of 33.3 billion RMB. 9.2% increase in revenue compared to the same quarter last year, which just shows they're on a real good growth trajectory. The company attributed its success to a rise in active customers, and an increase in spending on discretionary categories, which is good because discretionary categories signal that the Chinese consumer is recovering, which is what we want because remember, consumer buys things from companies who are listed on the stock market, and if they are making more money, generally the stock market goes up. They guided really well going forward, and I'll just give you a quote from the CEO Eric Shen. We rounded off 2023 with a set of results well beyond our expectations as we successfully executed our merchandising strategy to seize opportunities in value-based spending amid strong seasonal demand. Really good, guided up, and the market rewarded it with a very, very good pop. And look, I know we've had some mixed earnings, but nothing's fallen out of, I guess, if you looked at this 2 years ago, you saw, Baba report its first quarter of losses, in almost 2 decades. We're not seeing that. We're seeing growth. It's not amazing growth, but we certainly are seeing growth, particularly out of China's tech companies. And I always said the recovery will be led by China's tech darlings because the world will notice them. and money will come back into them, because you can't ignore these companies. They're some of the largest companies in the world, some of the most influential companies in the world. If we talk about, data is the most important resource in the world, well, they've got ample data to use to create, new products or new services, and they're technologically innovative, and the world will recognize them at some stage again. But you need to see some really good solid reports. And I think we've seen a pass mark here for Chinese equities over the last couple of weeks of reports. A pass mark. Not an A+, but, a C+, a B-, in my opinion, in terms of some of the reporting. But that was Vipshop. Let's go through the last earnings call, which we're going to look at today. And that is, I haven't got a title there if you're watching on YouTube, but that is Netease, which I thought was, again, this dropped last night. It's Friday morning here. Market did not like it. It did not like it. It got sold off on the back of that because it missed estimates, and particularly its Q4 estimate increased by, so Netease Q4 net profit increased by 67% year over year to 6.5 billion yuan, missing the expected 6.85 billion yuan. Non-GAAP net profit rose 54% to 7.4 billion yuan, below the anticipated 7.86, so missed on estimates. Revenue grew by 7% to 27.1 billion yuan, falling short of the estimated 28.21 billion. So that's where we saw there. They did see an increase in revenue, primarily due to the higher net revenue from online games, notably Egg Party and the Justice mobile game. They also did see during the week rumors that more games were going to be approved for them. Revenue from games and related services, which is their largest segment, rose 9.6%, not bad. Gaming gross profit margin improved to 69.5%. That's an amazing figure, up from 69% the previous quarter and 59.1% previous quarter. So margins are going up. Gross profit increased by 27% to 16.8 billion renminbi compared to Q4 of 2.4. Compared to Q4. Total operating expenses rose by 13%, and that's investment in new games. Some of the highlights, their cloud music, disappointed on growth, but I think it's the first time they run a profit on their cloud music, which I thought was quite good. Egg Party, which is one of their fastest growing games, reached 500 million registered players and 40 million daily active users during the Lunar New Year. Justice franchise hit 100 million active users milestone with engaging content and events. And Racing Master excelled in Hong Kong, Macau, and Taiwan, leading iOS downloads and grossing charts in Taiwan in its first week. So big growth there. And then their Fantasy Westwood Journey and Westwood Journey Online maintained popularity with its new content. This has been one of the better performing Chinese tech stocks within China. I think they've got a real good growth trajectory. They've benefited from Tencent kind of being forced to divest or not own so much of the gaming market within China. I think they've been a big benefiter of that going forward. They've got some great games. I think they've got some great innovation on the rise. I actually own this company, and I bought a little bit more on the back of the report. So that's Lee, and that is Netease. The code is 9999, easy to remember on Hong Kong markets. They also do have an ADR listing within the US. That covers our weekly wrap of China's financial stock markets for the week. I really hope you enjoyed it. A lot of micro today, or in this week wraps where we covered a bunch of earnings. Now next week is going to be a big week because we've got China's 2 sessions. So I'll probably dedicate the whole show, other than a market wrap, to what have we've seen out of China's 2 sessions, kind of cover what 2 sessions is. So please share this with your friends, give us a like, give us a 5-star rating on your podcast, and as always, we'll see you next week, and good luck with your investing.